we're going to visit now with Stewart, who is the co-founder of the Ore Group of Companies, which is a private organization focused on natural resource discovery and development. Ore Group has a significant equity in a series of companies: QC Copper, Orefinders, American Eagle Gold, Baseload Energy, and Mustango River Resources. And that group of company has assets that cover copper, gold, and uranium. Now, Stephen is also the CEO of QC Copper and Gold. We're going to talk about that today, and Orefinders Resources. Both of those are TSX venture listed companies. And he's also chairman of Mustango River Resources and Baseload Energy. And if he wasn't busy enough with all of those duties, he is also the chairman of the Young Mining Professionals Global Group, and he's the founder of its scholarship fund, something the Northern Miner partakes in, and has had a great relationship with young mining professionals since Stephen got it off the ground. And it is, I believe, the largest charitable organization that supports mining, engineering, and geology education in Canada. Is that so, Stephen? Has it gotten up to that level already?
To the best of my knowledge, that's true. We this year we're giving $120,000 away directly to students. 100% of our income goes directly to students. So that's something we're very proud of. Yeah.
Absolutely fantastic. Well, Stephen, in the years I've gotten to know you, you are one of these individuals that is it's one thing to have the vision. It's another thing to get things done the way you do. So it's a great combination. It's really nice to see how you've grown this, how you've grown YMP, how you've grown the Ore Group. Really excited and interested to hear what you're up to with QC Copper. That's going to be the focus here today.
You bet. Yeah, no, thank you very much. I'm here to talk about QC Copper, and we got lots on the go. We just finished our drill program, so I'm happy to update.
Excellent. Okay, Stephen, I'm going to turn it over to you, and we'll come back at the end with some questions.
Beautiful. So I'll just share my screen here, and we'll get started. All right. Well, hello, everyone. My name is Stephen Stewart, as Anthony introduced me, and I'm here on behalf of QC Copper and Gold. We are traded on the Venture Exchange under the symbol QCCU, and as well on the OTC on QCCUF. I'm here primarily to talk to you about our Opemiska copper mine complex, which is our flagship asset and has been our focus. There's a lot of anticipation about this drill program that I mentioned we just completed, and obviously it is designed to release our maiden resource. As I'll tell you about, the Opemiska was and will be, we believe, a legendary mine, but it's going to be reborn. It's sort of like Malartic, it's sort of like Detour, it's sort of like Cote Lake. It had a former life as a very high-grade underground mine. In fact, it was one of the largest copper producers in Eastern Canada. Over 1.4 billion pounds of copper were extracted. And when we acquired it, we saw very quickly that it had disseminated mineralization outside of these veins. And I'm going to tell you a little bit about the story of the Opemiska and how we developed it. Before I do, as Anthony said, just to sort of give you context, we are part of the Ore Group, and the Ore Group is a collection of junior companies. QC Copper is one of our flagships within it, but it also is a shareholder in Baseload Energy, and we've got a few other companies there. So really what the Ore Group represents is really it's about people, if I had to say one thing, but also assets and the ability to raise capital are important. I emphasize that we've got a very good technical team. QC is led by Charles Beaudry, who is a PDAC director, longtime director, and knows the Abitibi as well as anybody, and he is the brains behind the rocks on QC and other things. But anyways, our group has raised well over $40 million in the past 12 months for these companies, and about 6 of that went into QC Copper and Gold. But so that's we're more than just one junior. We are a group of companies, and that allows us to leverage skills, expertise, and keep our unit costs down, quite frankly. But really today's story is about the Opemiska. It's a rare opportunity to get exposure to a Canadian copper play. There are very few copper plays, particularly in Eastern Canada. And as I said before, this was a really a legendary mine when it operated. It was operated by Falconbridge, excellent operators, and they shut it down in 1996. And it was acquired by a family who held it for 30 years, and we had a relationship with them. And finally, after many years of negotiating to try and get our hands on it, finally in 2018, we did. And the first thing we did is we spent 2 years, and I'll show you the result of that work. But we spent 2 years taking that analog data, and there was a tremendous amount of data. I believe there was 150,000 drill holes, 800,000 assays, and more. And we took all that analog and we put it into a modern digital model, so that we make heads or tails of this and see if there is an economic deposit there. And very quickly after we digitized that, or at some process throughout that, we noticed this disseminated mineralization. So again, they were mining these very high grade, fairly wide veins, anywhere from 3 to 10 meters. But outside of that, there was a lower grade halo that we saw. And when Falconbridge was mining it back, throughout the 50s to throughout the 90s, either they simply weren't interested in this lower grade material, or probably more likely they didn't notice it because they weren't sampling the material outside of the veins, because the veins were very easy to see, as I'll show you why. They were literally almost pure metal. So anyways, we saw this thesis in the data, and then we had to go out there and drill test it ourselves. And so that's what we did after we completed the model, or we raised a little bit of money. We drilled 23 holes in 2019, and we had some eye-popping results. 13 of those holes came back with 100-meter intersections with ore grade mineralization, copper equivalent. We define ore grade being anything over 0.25% copper, because that's going to be our cutoff grade. So anything over that threshold really adds to our tons, and we believe that we can mine that at a profit in the middle of Quebec, provided it's an open pit. So yeah, that opened our eyes. That truly defined our thesis, or I should say proved our thesis. And then we knew that we had to go back and do more work. These assets needed to be drilled systematically. And at the time, 2019 copper wasn't really in vogue, but then call it post-COVID, copper caught a fever and got hot. And we raised a whole bunch of capital in 2020. I think we raised nearly $6 million at palatable costs of capital, which is always very important to us. And then 2021 is all about deploying that capital. And I believe in December, we started the drill program, 20,000 meters or 20 kilometers. And I'll show you the drill plan, but really it's all about drilling it out systematically, taking two pits as we had in our model, making it one, and then delivering a 43-101 maiden resource, which we will then move forward towards a PEA later in the year. So we believe we're still getting assay results in. We had 90 holes drilled in this program. We've had about 15 come in. We've released probably about 10 to 12 of those results. So we've got a lot of news flow on the horizon. And of course, all culminated with this report that we suspect is probably going to be early part of Q3. The only bottleneck really would be the labs, but they're moving along faster than they were. So this is a planned view of our property. As I said there, this is the Opemiska copper mine complex. The key assets that we're focused on are the Springer and the Perry mines. Between them, they had a whole lot of copper pulled out of them. They're about 500 meters away from each other, but they were independent mines at the time. And we've developed independent models, which this drill program, as I said before, is going to bring those two together into, in effect, a super pit. Outside of that, we've got two other mines that we acquired that were once part of the Falconbridge complex, which is the Robitaille, a smaller mine, but a copper-rich mine, and the Cook, which was a gold-rich mine. We've done a little bit of step-out drilling on that, but really that's not our focus. That's on some exploration upside, which I'll talk about a bit later. Again, I emphasize the focus right now is around delineating an open pit resource on the Springer and the Perry, or I should say the Opemiska, because it will be a single resource when it is released. These are some of the things that we saw in the historical data. As I said, when they were mining this, Falconbridge, they didn't do a lot of sampling outside of these veins. Why? Because it costs money to do that, takes time, and they knew exactly what they were mining. So this is an example of the high-grade veins. There's plenty of these veins still left in there, and these veins are going to, in effect, juice up our average grade because we've got the crown pillars, which is the ceiling of a mine. You must leave that crown pillar so it doesn't collapse. And then there's all these other pillars that there were support pillars in this mine. So there's plenty of very high grade, and this indicates this is 17% copper. And there's plenty of intersections there. We see here we've had up to 32% copper, 20% copper, etc. in these veins. But when you step out and you drill, as I said, outside them and you sample the host rock, you can get these disseminated intersections up to 1% or even more. We had 2.5% over 80 meters was our best hole in 2019. So this was what we saw in the preliminary data that wasn't really taken advantage of back in the day, and we've drill tested it. So these are some of the highlights. I won't read them, but look, just some of the highlight holes there. 1% copper over 162 meters, starting at 3 meters down hole. That's remarkable. Not only did it start literally at your feet, there is a rail road that comes right to our property, paved highway, airport 15 minutes away, a local community that is very much in favor. And of course, this is in the heart of Quebec, where there is no better jurisdiction. So we've got absolutely phenomenal grades, very wide intersections, and we're reinterpreting this deposit in a new light. So I think this is a very interesting project, and I absolutely know there's a lot of anticipation on this resource report. And this is sort of what it's going to look like. This is our model prior to our 20,000 meter drill program, which we are updating in real time, but this isn't what it looks like. So this is what we spent 2 years digitizing. And on the left here, you'll see this is our Springer mine, and this is our Perry mine. And in the red is the resource. And in the blue is the material that has been extracted by Falconbridge. Obviously, we had to back all of that out in order to build a model that is accurate. You can see some of the drill holes there and some of the old stopes, etc. But these are our conceptual pits that we had delineated based on historical data, which we are validating throughout this drill program. But in addition to that, you can see these holes right here, which are the planned holes. They're actually now completed, but these are into the saddle zone here, which is designed to intersect mineralization in between these two pits, so we can make it a single pit. And while we have not released any assays out of the saddle zone, I can tell you, in fact, I've got a photo of core that we pulled out of there. There's absolutely chalcopyrite mineralization in between them, and I expect to have those results out in a few days, maybe a week, but in the very near term. So this is what our pit's going to ultimately look like, except it's going to be updated, and this saddle zone is going to be gone. This is just another view. This is a plan view of this, exactly what you were looking at before. What you can see here are in red here are the veins, the known veins that were mined that are extrapolated to surface. Again, the crown pillar exists on this mine up to, in places, 60 meters. So what that means is these veins actually do come to surface, and they exist. They haven't been mined down to 60 meters. So that allows us, again, to use up the word there. These high-grade veins juice up the disseminated halo mineralization that is lower grade. So you can see very clearly here. And these holes here are all new, released in the last few weeks. As I said, they're just coming out. We had 126 meters over 126 meters at 0.44 copper equivalent, 235 at a lower grade, but 0.3. Again, 0.3 is above our 0.25 cutoff grade, which means that goes to our tons, and we consider that ore in another 140 meters. So we're getting this very, very wide lower grade. And so we see that disseminated mineralization coming in between anywhere between 0.4 to 0.6 is really the average of the disseminated material. And then when you hit these veins, you get anywhere from 3% up to 30% in places, which we believe is going to, we're not stating what our average grade is going to be, but we're certainly aiming for the 1%. We think we can reach that, given the amount of vein material that is left from the mining, and also new veins that we've discovered, or veins that were too small to mine in the context, in the economic context of a mine operating in the 60s or the 70s with copper at 40, 50 cents, etc. So this model will very soon be old, with all of these holes coming online very shortly. You can see that we're looking at ways to expand it beyond just the saddle zone. To the east, we see mineralization here. These are known veins. We're looking to extend the pit eastward, and potentially also southbound as well. This is an example of what I've been talking about. Really, this is one of our most recent holes, the hole 24 from 2021. It intersects some of these veins, and you can't really see the juice up here, but this is where it gets very high grade through these veins, that particularly if it hasn't been mined. And then you can see nicely in between these veins, there's clearly good mineralization out there. This hole is 126 meters at 0.44. So this is, again, starts at very near surface. And, it couldn't be in a better jurisdiction, better location in terms of infrastructure. So if you go to our website, we have about 25 sections just like this of all the holes. Every hole we've released so far has a section that illustrates and put context around what exactly we're trying to do. This is another point I'm gonna make. A friend of mine said, we are drilling waste into ore, and they are exactly right. And what do I mean by that? So a lot of this program is twinning holes, and what the purpose of twinning holes is to bring historical holes into modern context, so we can in effect validate the data. A lot of this resource is going to be based off Falconbridge data, and some at the core we don't have. And so how do we know it's accurate? Well, first, we know Falconbridge were good operators, and they were not fly-by-night juniors looking to promote their story. If in fact, they were wrong with their data, they were losing money because they were mining it. So we had a lot of confidence in the integrity of the data for that reason. But, of course, we can't just rely on that. So you have to twin it. And so this is an example, S21, it's a historical hole. It was a mine hole, and it was almost 60 meters, but they just did one single assay. And why? Because it was 6% copper, and they knew exactly what they were doing. So they didn't bother sampling anything else. When that hole S26 was twinned, it was drilled almost to 90 meters or 90 meters here, and you can see, it hit the same area of high grade mineralization there, even in higher grades, but it was mineralized throughout. And so, why I think that is very important for investors, prospective shareholders to understand, is because our model, as is, does not have any data on this, okay, if you will. So this hole that wasn't sampled, our existing model has no data. And what that means is that our model has this, which is clearly mineralized, as 0. So as we are drilling and twinning some of these holes, we're upgrading those holes. So we only have partial data. So that's what we mean by we're drilling what is now known as waste ore in our existing internal model. We're turning it into ore by proving that this mineralization is in fact disseminated. As I wrap up here, I'm just trying to keep it high level. We've got about 108 million shares outstanding. I'm one of the largest shareholders, got 0 free shares. We have about 6 million in cash, which is going to go down to 5 million in a couple of days because we're closing on a transaction, which I'll discuss very briefly. I'll also note we've got 9 million shares in another company called Baseload, which is part of the Ore Group. And Baseload was in effect spun off, and we sold an asset to Baseload. When I say we, QC Copper sold an asset to Baseload for 1 million, which is now worth 9 million on a mark-to-market basis in Baseload shares. So that's, if you look at our enterprise value, so that's our market cap, and you strip out our current assets, which is around $15 million. That means we are getting paid $8 million for our assets. And I just think that's a tremendous opportunity. That just shows the value potential there. Now, why is that? Well, I think the market's waiting for our 43-101. And when that comes out, I think we're going to be able to hang our hat on a very robust resource. And then people are going to look at the value and they say, well, these guys have a lot of cash. They've got a position in Baseload, and then they've got this asset, which we think is the dominant asset in Eastern Canada, certainly in terms of copper. So before I wrap it up, I'm going to just, as I said, I've already sort of talked about Baseload, but Baseload is a very interesting position for us. In effect, we're a copper and gold company. We're really a copper company, but we have a uranium kicker, and I'm a big believer in uranium, and I think uranium and copper in many ways are related to this green energy revolution. Baseload CEO is James Sykes, and so anyways, it's a significant position for QC Copper, and when the time is right, we can monetize that position for the benefit of QC Copper shareholders. It was a great creative corporate transaction that we made, and our group at the Ore Group is sort of developed a reputation for doing smart deals like this. And the last thing I'm going to point out before I hand it back to Anthony is we just made an acquisition. This was an opportunistic acquisition. I certainly believe in consolidating of the Chibougamau camp, which we are in the midst of. There are other great assets in the area, but our currency isn't high enough for us to start getting onto that strategy. As I said, we're only really being valued at $8 million when you strip out our cash. So we weren't looking for it, but this opportunity came to us by a company that was looking to leave Quebec and move to Africa and totally restructure. And we had relationships, and they said, "You want to buy this?" And I said, "Absolutely." It's a 535,000 ounce global resource. It is pit constrained. Okay, so that's very important. And it's about a 1 grammer, and it's located very strategic to our asset. Just to sort of pull out here on the west here, that's the Opemiska, and here is this deposit that we just acquired 50% of, called the Roger. We acquired it for really 2015 prices. We paid $6 an ounce for gold in a pit in Quebec with upside. Now, why I say upside, this is the pit constrained resource for the Roger, which I know is not our focus right now. We're going to finish on the Opemiska, but it was just such a good deal, such a strategic key asset. We had to buy it. And we also saw upside potential. So this is where the resource is defined within this pit. But then you see there's clearly mineralization that runs at depth. In fact, this hole right here, which I'm tracing, is a 500-meter hole at 0.3 gold. That's 500 meters from surface in the middle of Quebec at 0.3. Now, that is not eye-popping grades, but that's to me, that says something. There's a lot of gold in the system. It's continually mineralized. It's a porphyry system, which is unusual. So we think this is a great asset. We're going to pay attention to it when we get our currency up. But in the meantime, we are exclusively focused on our 43101 resource. And as I promised, this is the drill core that came out of the saddle zone. You can see it's nicely smoked with chalcopyrite there. Assays are pending. We always have to wait on that before you can bank anything. But that's the type of mineralization we're pulling out of this project, and we're very excited. So that's it, Anthony. I'd be very pleased to answer any questions.
Excellent. Thank you so much, Stephen. We have gone a little bit over here, and we have a bunch of questions here, so we're not going to be able to get to all of them. We will package them up and get them over to you, and then you'll be able to reply by email. But exciting stuff here. Great to see this, what you've put together here. Very excellent. We have one here from Terrence Olston. What's the minimum resource and grade you want to put together for a production? Go ahead.
Well, it's tough to say. I can't forecast numbers like that. I mean, we'd love to see 100 million tons on this go. If we don't get it on this go, we'll get it on the next go. So we're not going to talk about specific resource numbers right there, but that's certainly a target that we'd like to go. We'd love to come in at 100 million tons. We'd love to see 1%. Those are objectives. We'll see where the numbers come in.
Okay, and then from Eric Ham as well, along the same line, but more near term, what does success look like in terms of a maiden resource estimate?
Well, look, if we get anything with anywhere between 50 or 100 million tons, let's just put it there, we will be thrilled. That will put us heads and shoulders above the crowd in terms of copper resources in this district. And I should say that this resource is us just getting started on this. This is just a first pass at an open pit resource. There's upside potential at depth and along strike on this. But I think if we come in between 50 to 100, our shareholders will be thrilled. I'll be thrilled. And then we'll grow it from there.
And Stephen, what was Falconbridge's cutoff when they were mining this?
They were mining it at 3%. So, that means anything less than 3% is left.
Yeah.
And so that is significant.
Yeah. Well, back when, they were doing it at 3% because copper was what, 50, 60 cents a pound. And now we're getting towards $5.
Different times for sure. And of course it was an underground operation. I mean, there were times that Falconbridge was mining 10% copper out of this mine. This was an extremely high grade. I mean, it had different years. It varied. It was mined for 50 years, but I've seen the chart, and there was many years where it was double-digit % copper. It's phenomenal.
Wow. Well, kudos to you. I remember speaking to you years ago when you were Jay Klein from Evolution Mine was talking about it, about he's buying things at the market low. It's common knowledge, but it's hard to do because what people don't realize is even at a market low, no one's giving anything away. So you're able to still raise the capital and get deals done. And it's great to see it's bearing fruit for you now. So continued success, Stephen. Hope you have a wonderful year. And thank you so much for joining us.
Thank you, Anthony. It's a pleasure. Good seeing you.
Cheers.